Hi, I'm David Busch, Co-Chief Investment Officer at Trajan Wealth. I had the opportunity to speak to the Schwab Financial Network this morning on their show, Morning Movers, where we discussed the Federal Reserve and potential rate actions in the near future and how it'll impact your investment portfolio. So please check it out and don't forget to like and subscribe.
Welcome back to Morning Movers. I'm Diane King Hall coming to you live from the floor of the New York Stock Exchange. Joining us now is David Busch, CFA and Co-Chief Investment Officer at Trajan Wealth. David, thank you so much for joining us today. All right, let's talk about investor expectations and your expectations heading into the speech that we're gearing up to hear from Fed Chair Jerome Powell from Jackson Hole today. What's your expectation now?
First of all, thank you. I appreciate being here with you this morning. Yeah, today's a pivotal day because, everybody's going to be focused on the Fed Chairman Jerome Powell, his speech today. And everybody's looking for clues in terms of his position for rate cuts or no rate cuts for the end of the year. Right now, the market has, probabilities of approximately 71% priced in for a rate cut in September. But today, we could see either a dovish tone or a hawkish tone from Fed Chair Jerome Powell, and that will dictate market movements this morning.
Do you really think we're going to hear one way or the other? Because he often is so measured. And I know we've got conflicting readings recently. That jobs report that was much weaker than expected. PPI was hot. CPI was not. How do you think he's going to walk that tightrope? Do you think he really is going to indicate one way or the other?
I don't think that he will come out and outright say, if he plans to recommend a cut or, maintain policy rates where they're at. Instead, he'll be more data dependent. That's kind of been his stance, going back to the beginning of his term. And that's okay, but really what we're looking for is the tone and the clues. In the most recent FOMC meeting minutes, the Fed governors talked about that their biggest concern was for persistent inflation. But to your point, we've seen persistent inflation, and even though CPI cooled a bit, but we're starting to see the lag impact from the tariffs that were implemented at the beginning of the year. And so that's now flowing through to the data. And so with Powell, if the clues will be his tone, more or less, that's what everybody's looking at.
That's a great point. David, let me ask you this question. When you think about where the market is, we've had a pullback this week, right? The S&P 500 has pulled back. We've pulled back from those records that we had. The Dow's pulled back. The Russell's off 3% since highs. The S&P 500 down a little bit more than 2%. NASDAQ lower. Mag 7 has pulled back, losing more than 4% since the highs that we've seen recently. Obviously, it's not a huge, pullback. What's the question now about where things stand? Is it just kind of typical with this time of year, or do you see a potential for a reset happening?
Yeah, really. I mean, when we think about the policy rates, really the Fed's just controlling the front end of the curve, and so if he's more dovish, it should be a benefit to large cap growth, specifically mega cap, tech stocks like you mentioned, the Mag 7 and all of that. But where I'm focused is maintaining a balance, because if rates stay higher for longer, that's really a benefit to value stocks, especially those that are dividend payers. And we could see a lag effect, or may not have as high of a return or return expectations should rates remain high. So the balance is between growth and value. And on the fixed income side, the intermediate part of the curve seems to, in my mind, represent the best value. But I would also add, inflation protection on the front end, either through floating rate or Treasury inflation protected securities tips.
Okay, and then let me ask you this, David. So we've got obviously the speech today, but there are some economic data points that come before the Fed's next meeting, which is just weeks away, right? So we'll get PCE next Friday. We'll get another jobs report before they meet. What do you think is the tightrope act, given the push-pull between the Fed's, both policy signals and then the data that has come in so far about how to weigh, how positioning should be?
Yeah, so with the Fed's dual mandate of maximum employment as well as stable prices, they will lean towards managing inflation lower if they have to choose between the two. And the unemployment rate is still at historic lows. I mean, we're roughly at 4.2%, although we did see an increase in initial and continuing claims yesterday. So there is an effect on employment in the United States from the Fed policy. But if push comes to shove, I think they will manage inflation lower and focus on that versus the employment rate.
All right. Well, that certainly has been one of the themes that we've heard more recently. And the CME Fed Watch tool has odds decreasing, but still tilting towards the expectation of a rate cut in September. We'll see if that's still the case later today. Thank you, David.